So if you know, like a lot of times there's hidden reasons we get declined, right? And I think it's super duper important. No one likes declines. It doesn't feel good. It's rejection. It sucks. But it's more important to find out why I got declined. Like in sports, we watch film, right? So it's the same thing. You want to know what the risk factors were, right? So that way, because most of the time we'll get declined because we really wasn't prepared. We was excited, we was gassed up, But anyways, that's called risk factors. But here's 3 risk factors that most people don't see. And this is in the algorithms. This is in the language, right? And one is comparable credit. They don't go in any order, but just remember, comparable credit is really, really important. Like, do you have a track record, right, on what you're asking for? And again, I'm talking about any type of product that you're about to apply for. If you're about to apply for auto loan, algorithms they're gonna vet you based on comparable credit, also known as industry specific. So they're gonna pull their FICO auto score. If you're applying for an $85,000 car, lenders want to see how you did with a $45,000 car, something close to a $50,000, because it's a graduation kind of a thing, right? A lot of this stuff is simple. It's just language, and it's no different than how we would look at things from a simplicity standpoint, right? So comparable credit, right? If I'm applying for a $25,000 Chase Ink card, right? Well, I better at least show in terms of comparable credit that I have a $10,000 card, right, with available credit. Right, so like comparable credit is super duper important, because if there's no comparable credit, then as a lender, most of the time they're gonna give you what you already have, like what you're used to, right? Like there's like levels to this for real. All right, now insufficient credit, right? Here's another key component, right? So why people get declined and denied, and hope deferred makes the heart sick, but you want the information, right? So if I'm insufficient, that means, right, we all know, right, because we all kind of always thought, most people think that cash is king, right? Insufficient credit, right? And I still think cash can be king on some days. It just depends, right? I think cash is king depending on, if you have a lot of credit, cash is king. If you have a lot of cash, then you think credit is king, because it's one of those things like, what do you feel like you're missing, right? So insufficient credit means that they don't have enough data on me to make a lending decision. So think about your friend Bob, right? Your friend Chris or Gina. She may already have like 5 or 6 credit cards, right? She may already have some kind of small personal loan, right? But her house is paid off cash, right? On the streets, that's excellent. They'll crown you right there. In the credit world, that's not so excellent, because for one, you ain't spending no money with them, and for 2, that kind of erases someone's track record. In terms of if they're asking for if they're about to apply for a similar loan, you know what I'm saying? They want to see that you're active, right? And you have something that they can see to make a lending decision, right?